Many people consider Warren Buffett the greatest of all time, the GOAT at investing, but most people don't really understand Berkshire Hathaway, what the company really is, what the company owns, and the history behind that. In this video today, guys, I'm gonna do exactly that. I'm gonna give you a background, a brief history of the company. I'm gonna show you every single holding in the Berkshire Hathaway portfolio. I'll even demonstrate the performance of Berkshire Hathaway against the S&P 500 over the last 20 years. This one's gonna be really interesting. I guarantee you'll learn something from watching this video, so I encourage you to watch the entire thing. Stay tuned. Largest companies by market cap. This is as of April 4th, 2022. You can see Apple's almost a $3 trillion market cap, $2.912 trillion. Microsoft, $2.36 trillion. Saudi Aramco, this is a Saudi Arabian company here, of course, $2.3 trillion. Google, $1.894 trillion, Amazon, $1.7 trillion, Tesla, $1.183 trillion. And here's Berkshire Hathaway. This is BRKA. You can buy A shares or B shares, of course. The A shares are over $500,000 per share, trading right here. $518,714 per share. Market cap, $763 billion. You can see the ones below it. You might be surprised to see some of these. NVIDIA right behind it. Meta. Meta used to be much higher. Of course, it's fallen from the heavens. TSMC, this is Taiwan Semiconductor, Visa, Tencent, United Healthcare, and so on. There's a lot of great companies on this list. Berkshire Hathaway is the 7th largest publicly traded company in the world at $763 billion market cap. So Berkshire Hathaway is a multinational conglomerate holding company, and they're headquartered in Omaha, Nebraska. They own companies like Dairy Queen, they own railroads, they own Helzberg Diamonds, Geico Insurance, many others, and I'm going to show you that whole list, both private companies as well as publicly traded companies they own shares of stock in. But how did they even get to this point? How did Warren Buffett become in control of this company that's been around since the 1800s called Berkshire Hathaway? I'm going to spend a couple minutes here giving you some history. Check it out. Berkshire Hathaway's roots actually go back to textile manufacturing, and it was a company that was founded by Oliver Chase back in 1839. It was the Valley Falls Company in Valley Falls, Rhode Island. There's a ton of history that goes on from there. But in 1962, Warren Buffett began buying stock in Berkshire Hathaway after noticing a pattern in the price direction of the stock whenever a company closed a mill, So eventually, Buffett acknowledged that the textile business was waning and the company's financial situation was not going to improve. So in 1964, Stanton made an oral tender offer to buy back Buffett's stake in the company for $11.50 per share. Buffett agreed to the deal. A few weeks later, Warren Buffett received the tender offer in writing, but the tender offer was only for 11 3/8, slightly less than the 11.5 per share promised. Buffett later admitted that this lower undercutting offer made him very angry. So instead of selling at the slightly lower price, what did Buffett do? He decided to buy more of the stock, take control of the company, and fire Stanton, which he did. However, this made Buffett the majority owner of a failing textile business. Buffett initially maintained Berkshire's core business of textiles, but in 1967, he was expanding into the insurance industry and other investments. Berkshire first ventured into the insurance business with the purchase of National Indemnity Company. In the late 1970s, Berkshire acquired an equity stake in the Government Employees Insurance Company, known today as Geico, which forms the core of its insurance operations today and is a major source of capital for Berkshire Hathaway's other investments. In 1985, the last textile operation was shut down for Berkshire Hathaway. In 2010, Buffett claimed that purchasing Berkshire Hathaway was the biggest mistake he had ever made and claimed that it denied him, listen to this, compounding investing returns of about $200 billion over 45 years. Buffett claimed that if he would have invested this money elsewhere and directly in insurance business instead of buying Berkshire Hathaway, those investments would have paid off several hundredfold. All right, let's break down Berkshire Hathaway. I'm going to show you some segments here, then we're going to go on and show you some private companies, then public companies, then I'm going to show you performance against the S&P 500 over the past 20 years. So this is a segment breakdown. You can see insurance is this kind of dark blue color. Manufacturing is this peachish color. Light purple is McLean Company. You've got the light orange color, 13% is service and retailing. BNSF is a railroad, that's 8%, and then Berkshire Hathaway Energy is 9%. So that's the breakdown. This is by revenue, and then the EBT is earnings before taxes. So this is right on Berkshire Hathaway's website. It kind of shows you links to the different private companies, public and private both, but there's some links. This isn't a fully inclusive list, but I think it's good to show. So if you look at this here, they've got, Brick Company, Jeweler, Benjamin Moore, Berkshire Hathaway Automotive. They've got everything from real estate. They've got jewelry, BNSF Railroad. I mean, on and on and on. You can see everything on your screen. Duracell, Forest River, Fruit of the Loom, Geico Insurance, Hellsberg Diamonds, I mentioned earlier, Home Services of America, tons of companies on here. Oriental Trading Company, Star Furniture, MedPro Group, Kraft Heinz, Justin Brands, Jordan Furniture, Dairy Queen, IMC, Metalworking, lots of different businesses. It's a conglomerate, like I said earlier. It's almost like its own ETF that includes everything from energy to industrials to railroads. It's very different. If you're a growth investor, it could be a good way to hedge your portfolio. I actually consider it in the ETF bucket. I'd put it in my ETF bucket because it's so diversified, essentially as an ETF that's diversifying away from high tech and high growth type companies. So this is on Wikipedia, and you can go on Wikipedia and look yourself, and it breaks down even more businesses than we just saw. And a lot of the same names, of course, but just a ton, energy companies, a lot of stuff you don't even know what it is. You have to Google it. Flying J, so like gas stations, truck stops, on and on all these different things. See's Candy's on here. And what's funny about that, I worked for a startup company, and See's Candy was a customer, one of the first customers, and it was a large customer that helped this company kind of get out of debt and start being profitable. If it weren't for See's Candies, my career might have been completely different. So it's very interesting, the connection there between my old company I worked for and Berkshire Hathaway. And Warren Buffett always says, no matter what the economy is, if it's good, bad, and different, he likes buying companies that do well in all types of environments. He talks about See's Candies. If the economy is good or bad, if you want to buy chocolate for your sweetheart, you're going to buy it whether you have the money or not, basically. That's not verbatim, but a quote, something like that. But just, they make candies. They're a very simple business. They've been around for a long time. It's in the food and beverage. And that's something important to point out as well. You look at this, insurance and finance, media, breaks this all down here for you. Food and beverage, sports equipment, pipelines, top party craft, Oriental Trading Company, logistics, insurance, construction, clothing, luxury items, real estate, capital goods, furniture related, very, very diversified. So it's essentially, like I said, an ETF that's outside of the growth industries. You can even sell your house with Berkshire Hathaway Home Services. They've got a full menu of services to buy or sell your house. So you can find this on CNBC, do a Google search if you want to see it, and it shows you all the holdings for Berkshire Hathaway. When we're done with this, I'm going to show you the performance against the S&P 500 over the last 20 years. What's interesting is I just told you that they're not focused on growth, yet they've done just fine over the past 20 years, outpacing the S&P 500, and you might be surprised by exactly how much. So on your screen, you'll see Apple. You can see 5.6% stake in Apple, and it shows you the portfolio percentage. So on the right over here, that's the percentage of the portfolio, and these are for publicly traded companies within Berkshire Hathaway's portfolio. I showed you a bunch like Geico, Dairy Queen that are private. You can't buy shares of stock in those. You can buy shares of stock in Berkshire Hathaway and own part of those. These are, of course, public companies that they own shares of. It shows you here the stake that they have. So they own 5.6% of Apple, and it's 45.6% of Berkshire Hathaway's portfolio for publicly traded companies. Bank of America is next. They own 12.8%. That's 11.9%. American Express, they own 20% of American Express. That's 8% of the portfolio, and you can see and so on. Coca-Cola, they own 9.2% of. Coca-Cola, 7% of portfolio. They actually own 26.6% of Kraft Heinz, which hasn't been a great performer. That's 3.7% of portfolio. And you can see this whole list. I'm not going to read them all. You can go check this out for yourself. What I really want to focus on after I scroll through these, you can see they've got Activision, Blizzard in here, a little bit AbbVie. These are tiny portfolio positions, though, like 0.0%, 0.1%. These are just fractional positions down here. This goes all the way to the bottom, okay? The UPS, there's a, S&P 500 Trust and so on. But what I really want you to focus on here is if you look at the top holdings, even the top 5 holdings, and you do the math, 45%, 12%, 8%, a huge portion of this portfolio is in a handful of stocks. And you get this question all the time, Eric, how many stocks should I own in portfolio? Should I own 100 stocks? Should I own 5 stocks? The answer is it's completely up to you. It depends on your conviction level. I think the big thing to point out here, though, is that number one, Warren Buffett's not investing in hyper growth stocks. He's not investing in, Sentinel One and those kind of stocks with huge growth, huge risk reward. He does have some Snowflake, but it's a very small position of Snowflake, 0.4%. And one of his quote unquote, generals kind of bought that. So he's got people that work for him that will buy different holdings for the portfolio as well. But of course he has to approve that, and he trusts his generals to do that. But it's still a very small position, and they got that stock, Snowflake, at a cheap price compared to the market because they got it pre-IPO price. So you have to keep that in mind as well. But what I really want to point out here is that don't compare yourself to Warren Buffett, because Warren Buffett, he's an investor that's investing in companies he really understands. He's not a growth investor going for hyper growth, okay? If you're going for hyper growth, you have more risk and more reward. And for me personally, I think you need to hedge and have more positions. If you invest in these type of companies and understand the business, it's totally fine. If you think about it, if you're a business owner, if you're a CEO of your own business, a huge stake of your net worth is tied up into that company. And that's rightfully so, because you're in charge of your own destiny, you're in control of your own destiny, and you have control of how that company performs. I don't necessarily have control of the companies that I invest in. And so for me personally, I prefer to have more positions. You can see he has a lot of holdings, but he's got a lot of concentration. I like having, 5-6% max in a position. He's comfortable going 45%. Now, of course, a lot of that's growth. Apple's grown. He invested and it's grown into a larger position, but he hasn't taken a ton of profits on it either. And Bank of America has done okay, but not great. And it's interesting to see how Berkshire Hathaway overall performs pretty well when some of these are kind of dogs like Kraft Heinz and things like that. Very much dividend growth type investing for the most part. Almost all these companies have dividends. And they're quality companies. They're high quality companies. They're blue chip companies. The other thing I want to point out, if Warren Buffett wants to call up, Tim Cook and ask him how Apple's going, of course he can't do like insider information, but he has the ability to talk to leadership on a one-on-one basis, probably whenever he wants. You and I, we don't have that luxury. So we're not going to have the same insight into these businesses as Warren Buffett is either. So take that with a grain of salt. At the end of the day, hear me say this. However many positions you want in your portfolio, it's up to you and what you're comfortable with. If you want to have three stocks or 300 stocks, that's totally up to you. Every person's going to be different, and don't let anybody tell you differently. Don't let me convince you otherwise or anybody else. At the end of the day, it's what you're comfortable with, what you have conviction in, and you can sleep well at night knowing that your portfolio is in good shape. This is important to understand, to learn from these legends like Peter Lynch, like Warren Buffett. But at the end of the day, I think you should make your own path and do what's best for you and your money. All right, so what we're going to do, guys, here, I'm going to compare the SPY, that's S&P 500. There's different tickers you can use for the ETF. We're going to use SPY, SPY. And I'm going to compare that to BRKB. So if you look at this chart down here, guys, BRKB is actually the blue. This gray here is going to be the S&P 500. Now, the comparison here on 6 months, Berkshire is crushing the S&P 500. Up 22.79% versus only 3.24%. Let's look at 1 year, 2 year, 5 year, 10 year, 20 year. 1 year, Berkshire, 31.85% versus 10.84%. 2 year, getting a little bit closer, but still outperforming quite a bit. 80% to about 59.5%. 3 year, okay, we're getting closer. 64.98 for Berkshire. And you can see 56% on the S&P. What about 5 year? On the 5 year, you can see we still have outperformance. Let's go to 10 year. 10 year, massive. 337.74% for Berkshire Hathaway BRKB versus 244.5% for the S&P 500. Both are really good, but Berkshire's definitely outperforming the S&P 500. Over 20 years, guys, 659% for Berkshire BRKB versus 396% for the S&P 500. That's significant outperformance. If I do a max chart, this is on bar chart, if I do a max chart, 1,602% to 930%, and this goes all the way back, it looks like, to the 1990s, 1994. So you can see, guys, that Berkshire Hathaway has done very well. It's not growth-oriented, but it does quite well against the S&P 500. What about the NASDAQ, the QQQ? What does that look like? Okay, so now I'm comparing the QQQ, and I'm going to go on 1 year here. So 31.85% for BRKB versus only 8% for the QQQ. Now, if I zoom that out to 2 years, you can see they're getting a little bit closer, but BRKB is outperforming again by 10%. What about 3 years? Okay, now the QQQ is actually outperforming 94% versus 64%. What about 5 years? 5 years, 166% versus 110%. The QQQ is outperforming here. What about 10 years? 10 years, 483% QQQ, 337% for the BRKB. 20 years, well, 1,417% versus 659%. So technology has done very well, and you can see that QQQ is outperforming the S&P 500 and that QQQ is outperforming BRKB. But if you're looking for something to diversify yourself outside of maybe the S&P 500 and maybe outside of hypergrowth or QQQ, maybe BRKB is a good choice for you. You know, of course, BRKA is going to be $500,000 a share, but you can buy BRKB at $348 a share as of today, which obviously is more affordable. Even at $348, that's pretty expensive, and you can do fractional shares. But there are B shares and A shares. Of course, if you're going to be investing, you're probably looking at B shares. I hope you enjoyed this video. Please do like, subscribe, and comment. Appreciate your time and attention. Have a great rest of your day. Take care.